I would like to say that wisdom is learning lessons that history teaches us and then being able to apply those lessons in the present. For the month of June, the market sold off as the month ended after they were almost back to their all-time highs. And so one of the things I want to remind myself and now you about the tech bubble bursting is if you go back to Y2K, remember the computer wasn't going to work. It wasn't going to read the time. Like, oh my gosh, did we ever factor this in? And so a lot of people were buying new computers. And at the same time, technology was advancing. What happened on January 1st, 2000 is our computers worked. But because everyone had really done a lot of upgrading with their computers, no one needed to really buy a computer for the next several years. And so part of the reason the tech bubble burst is the demand or the spending, buying of these computers stopped. And if there weren't more sales, then the tech companies didn't have those earnings, so their prices came back down, and that was the tech bubble bursting. There was more to it than that, but at the highest level, that's what happened. And so how do you take that and apply it now to what's going on in the present? That lesson from the past, wisdom, how are we applying that now? And, the SpaceX IPO was kind of concerning, the biggest in history ever. And after doing a little research, the $75 billion that company raised in the IPO is money that they're actually spending to continue to try and meet the demand for what is the AIs and the data centers. And where for a while now, many of us, myself included, is like, how can this keep going? Well, if they keep spending the money that they're spending and raising money and spending the money to pour back into this infrastructure, the building, the technology, the chips, the software, the energy, et cetera, that's driving economic activity. And that's driving these revenues that these companies are having by using these data centers. And that's going to continue until we wake up one day and they tell us they built one too many data centers. But these companies are telling us on a quarterly basis what they're spending this money on or what their expectations are. And it is completely up and to the right. And that's, I think, why the markets keep going up and to the right, is because that money is being deployed and being spent on and creating things that are more productive and profitable. We're watching to see when that spending slows down. Does that mean we may need to make some adjustments? And we're using a lot of different research to take care of that. But if you're thinking that you want to just walk away from this or you want to, it's not going to continue, I'll agree with you. It's not going to continue when they stop spending the money. But that's projected for the rest of this year. It's projected into 2027 and is supposed to be more than 2026. And so this may have a longer run than we're thinking. And that's why we take care of these decisions for you as our clients. And what we did here in June is we rebalanced our portfolios in light of what the research is telling us. And at the same time, for those of you that are living off of these portfolios, we raised for you what you told us you needed for this next 12 months. So that we don't have to worry what happens with the election coming up or with interest rates or how does Iran really get solved or does the price of gas come down? The things we can worry about, we don't have to worry about as far as your cash flow need for the next 12 months. And that's part of the value add that we try to deliver to you, our clients, that you can just continue to enjoy this summer and the rest of this year because we've done it for you. We set it aside in advance of the need. And so on your end, you just need to make sure you keep communicating back to us what those needs are and know that from there, we're going to take care of it.